Hello, hopefully someone can hear me. Can someone just put their hand up if they can hear me? Okay, cool. Um, right, I'll just let some people log in. Thank you for coming. Um, so next week, I'm going to try something slightly different. Don't know if it's going to work or not. I'm going to try to have this meeting slightly earlier. Somebody asked me to do so, so I'm going to do it next week as a one-off, just as a trial. Um, I'm going to do it 2 hours earlier. Most of you people that are US based will not be too early for you, but people that are in Europe or in Asia will be able to participate. I don't know if it's going to work or not. But I feel that since somebody asked, I think it's fair. Um, Hello, George. Every Tuesday, my routine, I go for my little jog in the park, and yeah, I just think about how far we've come. Thank you for coming. Thank
Thank you.
you so much. I really appreciate like your commitment. Um, I I haven't got a lot to teach, and I'm really grateful that that you spend your time with me, and I'm really grateful to see your face. But if you
Thank
ever
you.
decide that you just want to lay in or whatever, that's cool as well. Um,
Thank you.
thank you. Um, so today, you know, you evolve with time as an investor. Uh, you start building on your experience with things that you see in the world, and Um, something that's been resonating a lot with me lately is this theme that investing is an organic thing. And in my mind, I see it as a wave that you're trying to be part of. And oh my God, sorry, I need to cancel that. And I see it as a wave that you need to be part of. And I came up with this thing that I call the three C's. And the three C's stand for your ability to be curious with an open mind and have enough commitment to be able to go in and execute when the cards look favorable and to execute when everything that everyone can see is only favorable. And then the calmness to be able to not use a stop loss and to sit on your hands. So I'm going to unpick. Sorry, my dad just keeps persistently calling, just wants to see my face. So I'm going to unpick these ones here. And yeah, so what I think about investing is that curiosity to be able to kind of double click on certain things and say, you know what, everybody is saying this, but is this really what is happening? So last week I highlighted Cecil, which many people said, which I understand. I understand 100% why I recommend it. The stock was up 20% pre-market, and then it sold off during the day, and then it sold off further on a Friday. Um, and people were, oh my God, this is like the biggest piece of crap going. And yeah, um, how can I justify that? So, you know, I don't expect you to take my word for it. Listen, I know that at the end of the day, the share price is God. And whatever the share price does, it's the ultimate judgment on your call. But I also know from my experience that I've made recommendations before. For example, in my mind, I was thinking about Intuitive Machines, tickers Luna. I'd already been recommending it since about 790. So I was already we were already fairly up on that position. But as we went into the earnings the day before, uh, uh, the competitor, oh God, I forgot the name of the competitor. God, I can't even look it up now. But like the big competitor, I just forgot to blank out. Anyway, Rocket Lab. Rocket Lab announced their results, And people, myself included, have looked at Rocket Lab and say, okay, Rocket Lab has seen a lot of investor appetite for this. Therefore, I feel that if there was a time to get involved with Luna, it would be now. I think that the risk reward now going into earnings, and I never do this. I never, ever do this. And I did it as a one-off. And I went through the report and I misjudged the report. I felt that I was thinking in my mind, I was thinking too much about 2025, and I didn't think enough about the quarter Q4 2024. And the quarter, it wasn't going to be as good as people had expected it. So over those 90 days, it wouldn't be as good. And as a result, when the earnings for Luna came out, the share price tanked and tanked and tanked, and then there was the capital raise, and it was just a bloodbath. And, I said to my mind, okay, yeah, it is a bloodbath, and I get it, man. I get the reasons why people don't like it. The next 90 days, they're going to be rough. You have to sit on your hands for 90 days, and you will have to be calm and see through that. And today, everyone's like, oh my God, Luna, what a pick. Oh my God. Like people are just going bananas about it. But, nothing has happened. Like nothing really, in all intents and purposes, has happened between that earnings report where the stock was dying and it was a complete buff, and everyone's like, oh my God, this is a dog. Why even bothering with this dog? And now, nothing has really happened. And when I actually picked Luna, I like the idea of space economy, but I just felt that in my mind, I couldn't really justify paying up for Rocket Lab. It could work out. It clearly has worked out, but I couldn't justify it. And I, generally speaking, prefer to back into the leader rather than backing into a tier two player. I generally feel that if you're going to get exposure to an idea, you might as well get exposure to the leader. But on occasion, I have to, I've had to compromise. I did that in 2023 going into 2024 when I went for Broadcom rather than NVIDIA. Obviously, in hindsight, NVIDIA would have been the better pick. But, it's you have to kind of sometimes just think, okay, the risk reward, you have to really judge it up. And, with Broadcom versus NVIDIA would have been the better pick. I made a mistake there. I went to Broadcom. We did okay. It was up 50%, but in 11 months. But it wasn't NVIDIA, right? And I did the same thing here. I went for Luna rather than Rocket Lab, and I feel that so far, Luna has done significantly better than Rocket Lab, but you don't know that. You're kind of thinking. So back to Sezzle. So I'd been with Sezzle when I first recommended it. I think it was around $70 or 75. I can't remember precisely. It was in that ballpark. And the stock had ripped to that point, and I said it was around, let's say, it's just around discussion, I say it was 75. And I said at the time, okay, I know the share price is up a lot, and I get all the reasons why you don't want to buy it, but just bear with me. It's going to be okay. And that worked out favorably for us. I recommended it. We sold it at 105. The moment I recommend to sell it, the stock ripped to over 400. And everyone's like, oh my gosh, like, why do you leave so much money on the table? You're going to be a long-term investor, long-term investor. I was like, oh, okay, yeah, thank you for teaching me this. Yeah, I'm so grateful, thank you. And, the stock then kind of reported Q3 results in early November, and the stock started to kind of peter out. And the argument that the short sellers built on was that their figures for their active consumers slowing down, and even there's a lot of the numbers actually shrinking. And why is it shrinking when it's supposed to be a growth business? For their part, Sezzle argues that the reason why it's shrinking is because they're churning out those low economic value users or consumers, and they just let them churn out and go after and retaining the more valuable users that are actually going to be driving the free cash flow of the business. So, but I understand, the share price is down, and that's all that matters in the short term. But I would like to believe that, when we come to wrap up 2025 at the end of this year, I'll be able to say, I'll be able to build on that story of Cecil, how, everyone was like, oh my God, it's such a dog, such a dog. And just for the sake of comparison, with Peloton in the summer, it was pretty much a very similar setup. It was going to make a lot of free cash flow, but the subscriber figures for Peloton were churning lower, and people were very negative on that. But I felt that the risk reward was okay there. And obviously, long story short, Peloton did work out, but it was really volatile at first. So, like, I recommended it, and for the first 3 months, it was between approximately 480 and 520 or so. It's kind of like up and down, up and down. And then after it went through the earnings, so after those 90 days, it went for the earnings, the stock went up like 30-40%. And then, about 2 weeks later, we sold into strength. I like to sell the strength. But, I had to be calm, had to sit on my hands, and it's not easy, it's not easy. And like everyone else on the call here, I'm here because I'm trying to make money for my family. I'm working hard to make money for my family. And it's important, it's important for me, not what my performance is, what I'm able to convince you, the paying subscriber, of holding in your portfolio. Because, when the market's hot, people only care about what they can buy. But when the market cools down, people are like, okay, I'm going to wait for a better holding period. I don't know if this person's on the call, but I'm not going to mention them by name. They were like, oh, I'm a really long-term buy and hold investor. Oh, well, that's cool. I was like, fine, that's cool. And then the person was like, oh, but I'm going into tax loss season, so I've just sold everything in the portfolio that I bought since November because I want to avoid the taxes. And I'm like, but like, this is like, not, you should be trying to maximize how much tax you're going to pay, because how much money you made is not about trying to make sure, oh, you know what, I didn't make any money, but I didn't pay any taxes. Like, it's not like that. I take a lot of responsibility for, guiding people and giving them the conviction that it's going to be okay, and even when mistakes do happen, like DraftKings, it hasn't worked out that well. It's been a real drag on my performance. What else? There's been like other things that I screwed up massively. Like in the summer, I screwed up with PDD, Pinduoduo. Yeah, I screwed up that they weren't going to meet their free cash flow, and I sold. I recommended to sell at a negative 35% loss. That was brutal, So I have screwed up a lot. But, on balance, this way of thinking about the change in the narrative, it works. But as I said at the start, it's like a wave, and you need to combine those three aspects of having curiosity to think, is the narrative that people think about the actual narrative, or is there a change in the narrative? Okay, so that's the curiosity aspect. And then you have the commitment to be able to buy when people are kind of like, I'm not sure, it doesn't look right. And then to sell when people think, oh my God, this is so perfect, this is the next whatever. Okay, so you need to have the curiosity, you need to have the commitment, and then, as I discussed many times, you need to be calm about it. Okay, so there's a few people on the call, some I haven't seen before, some that I have. So if you kind of want to ask your question, this will be a good time.
I'll ask one.
All right, go ahead. I can't hear you. Is DJR?
Sorry.
It's fine.
Sorry.
It's fine.
Can you hear me now?
Very loud and clear.
You can?
Very nicely.
Yes.
Okay, good. Hi. Sorry, everyone. First of all, I want to thank you. I've been on the boards thanking you profusely. I guess I had a quick question about how you think about the intangibles. I know you're a narrative person,
Yeah.
and like for me,
Hmm.
Rubric and NBIS, Nebius,
Hmm.
they strike me as unusually strong management, at least as far as from my neck of the woods. I was just wondering if you could talk a little bit about your sense of how you evaluate leadership and
Hmm.
branding and like just intangibles, because it seems to me many analysts and some that I admire incredibly, they don't even factor that in. Everything is math and
Yeah.
finance, and it's like,
No, no, no,
so
no.
anyway.
I don't think that I don't think that that's completely true that it's all maths and finance. No, I don't believe that's completely true. But what I believe is that you have to lean harder into your strength, I think. And, there's different ways of going about this. But generally speaking, let me give you a good example. Have you ever read Poor Charlie's Almanac?
Yeah, I have it.
Okay. Uh, so in Poor Charlie's Almanac, he talks about Jack Welch, CEO of General
Sure.
Electric at the time, and people thought that this dude was like the Messiah. Everyone, like, I don't remember the exact quote, but it was something like in Charlie's book that he writes, it'd be great if every American grew up to be Jack Welch. And fast forward the clock, and we hear about things that weren't immediately obvious that led to the demise of General Electric. Namely, the accounting was a bit weird. They were taking on a lot of debt. They were kind of doing a lot of shenanigans in the background. So this person managed to fool Charlie Munger, who is arguably one of the savviest business leaders of our time. So I'm not Charlie, and you're not Charlie. And it's difficult to read a few PR lines and have a good feel for what the underlying prospects of the business are. So I don't do that because it's not my strength. I don't do that. And I'll give you a little different example. Sometimes, businesses are building all these intangibles, but actually, when it comes to monetizing it's pretty rubbish. I'll give you an example of a business you might have remembered from back in the day of BlackBerry. Man, BlackBerry had all these intangibles and had all these patents and this and that and the other. And what did they do with it? Jack, they didn't do anything with it. So, you know, intangibles kind of build a narrative of themselves. And I try my hardest not to get caught up in the narrative. I try to unpick that. And because when the share price falls, those intangibles are not going to keep me safe. A lot of those businesses, the intangibles are really the people that go up and down in the elevator each day and leave at the end of the day. The code, it erodes after a while. The code that a lot of these companies, it just erodes. It doesn't last forever, this code. It's not like it used to be back in the day where you were kind of building up a lot of customer goodwill and stuff like that. So it's quite difficult to have enough conviction on that. I know it's not the answer you wanted to hear. And from
No,
your question,
it's
I get
okay.
this.
I don't have an agenda. I just want to hear
No,
out
no, no,
what
it's
you
fine.
think.
But from your question, I get a sense that this is something that you do look forward to. And as I say on many of my calls, I can only speak about the way that I do things, and I have a view of take it or leave it attitude. I feel that you know it's important to refine your own strategy, but go back to that C of having the curiosity to keep an open mind to other strategies. Um, um, Niels Bohr was a physicist, and he had this kind of good quote, which I really like, that he says that you can't teach a human being new ideas. You just have to wait for that human being to die and the new human being to be grown up and be able to embrace those new ideas. And I was like, man, when I heard that, I was like, dude, I don't want to be like that. Like, I don't want to, like, the best that I can do is take my ideas to the grave so that my daughter can come up and she can come up with a new idea. Man, that's an awful way to go about life. So as I said, I have my strategy, but my strategy has also been evolving through curiosity. Um, and I I just say be careful when you're trying to put a judgment on a CEO because the business of the CEO, DJ, is to really persuade people to their vision. It's really whether it's the suppliers or whether it's the customers or the employees or the shareholders, is to persuade people. So be cautious about that.
Great. Thank you.
Any other questions? Nobody else?
I actually have a question. Do
Hi.
you ever consider sort of the macro environment? Like,
Yeah,
you know,
Sandy, I recommend that you never do that. I guarantee, man, you're going to lose capital in 2025. I guarantee you're going to lose capital like that. It's. I know that we highlight those Drachamillas and those, you few individuals on the planet that have a long track record of doing that. But there are more than 7 billion people on the planet, and for us to be able to name those 5 individuals that have been able to do that, that is not a good way to go about it. Play the easier game. You know, the macro game sounds fascinating, sounds alluring, sexy. I get it, man. It's like, whoa, so cool. 2025 is going to go like this, and then add a load of numbers to it. But you're in the business. I don't know what business you are, but you are trying your hardest to preserve your capital. And you asked me this question before, kind of not this is a question, but it's kind of idea of trying to forecast stuff, and it's difficult. It's really difficult to forecast the future. It's really difficult. But a slightly easier game is to say, I think that things can continue to be as they are. So, as an example, like, oh, Trump is doing this and Trump is doing that, therefore this is going to go there. Like when Biden came to power, everyone was on about solar panels, like solar panels, like it was like all these like first solar this, solar edge, solar that, blah blah blah, and people were like, oh, the solar is going to go, but the businesses were not economically viable. They were sustaining themselves on credits from the government. So basically being held up by the government. And that's a tough proposition because you don't know when the rug was going to get pulled away from that setup. So I caution anyone to think about that. Now, that being said, at certain times, you can have a macro call, okay? For example, I have this business, Gear Cloud Technology. I strongly believe with all my being that China is a dragon and is going to just, it's going to be, at the moment, China is uninvestable. China is uninvestable. China is uninvestable. And it will reach a point in time where it will be, oh, like China is the place to be. China is the place to be. So that is, quote unquote, a macro call that I'm making on China, but I've backed it into one business out of my 20 stocks, so one. So it's a 5% position, and it's a business that I believe that is growing at a rapid rate and has strong prospects ahead. So really a micro call that I'm making, but I think in my mind about what's the macro potential there. But making bold macro code and then putting your capital on the line, I caution you against doing that. Does that answer your question, Sandy?
yeah, I mean, it was really, I understand you're kind of doing fundamental bottom up investing. I was just wondering about, since I'm new to your platform,
That's fine.
I'm kind of wondering a little bit more about timing of getting into your names and
Yeah,
whether there
yeah.
was, like especially after yesterday and an inauguration and a big bold one at that. I just didn't know if you considered timing for entry and exit based
Yes,
on some of
I
those
think so. I
factors.
think about that a lot. So the way that I personally do it is that I put 2.5% of, so if I'm going to have a 5% position, I put 2.5% down and I wait 4 to 6 weeks. I don't do it straight away. I don't like to do it straight away because like I don't like to react. Okay. I like to let time do its thing. And by that, it builds in me a process. Okay. The process is that I'm in my mind thinking about allowing the time to drive my upside rather than me being smarter than anyone else. Okay. Let's use the example of Sezzle. So Sezzle, I recommended it. It was 320. I bought it 320. And then today is like 220, let's say. obviously I'm underwater, and I'm not saying, okay, now I've got to buy more. Let time do its thing. Let the pieces fall down, slow down, and we'll see. Maybe in 6 weeks, which is when they report their results and they report their audited financials, you'll be like, oh, you know what? I was actually right, and then I can kind of back in further and build it to a 5% position. So I like to kind of average in with 2 bullets. But when it comes to exit, I just want to call it a day. I try my best to sell into strength. And I try to sell when people really see nothing wrong with the business. For example, many times, like with hymns, I sold hymns and it kind of continued going up. Or Robinhood, I could sell, it continues going up, Palantir, but that's okay. I got this idea that, this expression, half a bread is better than no bread. But I prefer to kind of lock in some gain rather than hoping that someone is going to pay a more silly valuation on top of me. Just it's the process. That process is really important of putting the temperament on your side and not trying to outsmart the market. Because when you get into that game where you think, oh, the market is wrong, I am going to do this because I'm going to prove to the market. And then, you buy in and you kind of like, you're waiting on your fingers. And then 2 days later, you're still underwater. And then 2 weeks later, you're underwater. And you can start getting really edgy and nervous. So it's much better to align yourself in the temperament of allowing time to do its things.
Okay, thank you.
Okay. Is there any other questions?
Yes, could you clarify, backtrack 5 minutes? You said you're long on something in China. What was that?
Well, Giga Cloud Technology.
GCT? Yeah,
Yeah,
thank you.
it's not really a China business. I view it as a multinational business, but it does have this perception amongst people that it's a China business, and I recognize why. They're exporting out of China. Um, in the same way that one could make the case that Pinduoduo is a multinational business because they have Temu, they have operations into Asia, and there's that argument that I believe that Geek Cloud Technology is also a multinational business. But for now, anything that even has the perception of China is like, oh my God, I'm not going to touch this, blah, blah, blah. But I think that the pendulum will swing as well, because China just does some things really, really great. And you can put tariffs on China, and you can do those kind of things. But at the end of the day, what really matters is who's developing the better product, right? Because it's kind of a free market to a certain extent, and you can charge more for things coming in from China. But if the quality of the service or the product is superior, then consumers will buy it because it just wins out. Ultimately, it will just win out, and you can put tariffs, but it just that's how it is. That's capitalism. It will just win out. But I've been recommending this stock for more than a year, and my time limit on this stock will be this summer. So in this summer, either it's above $45 to $60, or I was wrong and I'm just gonna pull it today because I don't want to have to be me against the market. First, I'm never going to beat the market. And secondly, it's bad for your temperament, it's bad for your psyche, and it prohibits you from having that curiosity to look into other things because you're too bogged down and depressed trying to prove something to the market. Yeah. Okay. Any other questions from anyone?
I have one more quick one.
Sorry,
Oh, sorry. Let someone else go. I already asked.
Go ahead, Josh.
Oh, well, I know you look at many companies and you've picked from Canada and China. And I know there's thousands of companies, but do you ever look at maybe a developing nation for example, Indonesia or Philippines, or, you that's too much, too broad for you to concentrate on?
No, it's not that it's too broad or to think. It's just that, I have to think about the subscriber base, and the subscriber base are retail investors, and they wouldn't have the stomach to go with that. So I have to go to more mature markets, and I don't even come to the UK. But I believe that there's enough stuff happening in North America. Okay, DJ, do you have a last question?
Yeah, one quick one.
Yeah, sure.
And maybe if this is in the writing, I'm sorry I missed it. But basically, first of all, it's -5 here in Chicago, so forgive I look pretty bundled up. But
Oh my goodness, sorry.
it's crazy. But anyway, when you hit your price targets, some of them happen very fast, which is great. But like my question is, is it hardcore? I hit my price target, there's a ton of stocks in the market, I'm automatically out, or do you reevaluate it almost as a new investment?
Yeah, exactly. Very good question. That's a really good question. Thank you for asking it. The vast majority of the time, it hits a price target, I'm going to go. The vast majority of the time. I have done a few exceptions with time, but exactly like you said, I have to be able to, in my mind, underwrite it again. I did it with Palantir, that I basically, when it hit 20, I was like, I'm going to underwrite it to about 30, and I got out at 28, so I didn't quite hit that. I did it with Robinhood, same thing. I did it with Intuitive Machines, or Luna that I was talking at the start. But very, very much you have to think, can I underwrite this business for the next 12 months? Because that's my holding period. And when I say, for example, to you, okay, DJ, buy Teladoc or whatever, I'm thinking to myself, this person, do I feel comfortable recommending to this and be able to give them the conviction to hold for 12 months? So very much good question. I really like that question. Thank you for asking it.
Okay, sure, absolutely.
Okay, and that's it. I don't think there's anyone else asking anything. Nobody else? Okay. I would like to say thank you very much for everybody. I'm really pleased to see everybody. And yeah, remember, next week I'm going to do it at a slightly earlier time. For most of you will not be applicable. But anyway, if you can, sure. See you soon. Thank you so much. Bye-bye.
Thanks a lot,
Thank
Michael.
you.
Thanks, Michael.